event is our 3-year anniversary for Crypto Mondays. So I'm excited to say that and to have you all here. It started off at live events, and then obviously we've had to move it virtual for the pandemic, but I think it's come quite a long way considering how many members we have. Yeah, so I think that's it, really. We have a Telegram group. If you guys want to join the conversation on Telegram, I can pop that in the chat. And yeah, thanks everyone for being here. We're excited to hear from Jason Dean, who's with us here today, who's going to speak.
Thank you, Caitlin. And yeah, just a few words as always. If you have any questions, just put them in the chat. I will be asking them at the end of the talk, and then obviously you'll be able either to just ask them directly or I will read them out for you. If there's something that's like super immediately related to what Jason is saying, I might just throw it in there, Jason, if that's okay for you. But generally, we'll be aiming to keep all the questions until the end. And yeah, it's super exciting that Crypto Monday in London has been now running for three years. We can't wait to actually see you all in person again in the future. I think I've been here now. I'm Ole Giberstein, so I'm one of the founders of CoinRule, and I've been here also. I think what has it been, Caitlin? Like 2 years at least now. Yeah. So yeah, very excited about the next 3 years. And I'm gonna give the word now to Jason. And please, Jason, introduce yourself, and the stage is yours.
Well, thank you, Oleg, and congratulations, guys, for 3 years. I mean, that's pretty impressive, and of course, you've done a good job of adapting as the world around us has changed. Now, I was speaking to Caitlin a few weeks ago about what we were going to cover today, and you know, I said, "Oh yeah, let's talk about mining because I'm kind of into mining." And we can talk about, you know, it's big in the news at the moment, environmental impact and who's mining, you know, for nation states and all that kind of stuff. I went, yeah, all gung-ho about that. And then I realized as I put this together just how big a subject this is. So what I've done is I've had to kind of pick out just a couple of key points, and I'll just pick those really and work around those. And then we'll leave it open for a bit of discussion towards the end. So I hope that's okay. You can see my sort of background on the screen there. I'm a Bitcoin analyst at Quantum Economics. That's working with Lou Kerner, actually, and Matty Greenspan, those guys. Do a bit of advising for Luno Wallet and Exchange. You might have seen me writing about a few things here and there on voice.com and on Medium, a top writer there, and a published book, several books actually, but one in particular, How to Explain Bitcoin to Your Mum, which came about from, well, basically trying to do that one day, and that didn't go terribly well. But anyway, it ended up with this book, and it worked out nicely. You'll see me contributing pretty frequently, usually comments or quotes to Forbes, Newsweek, CNBC, Bloomberg, pop up in the telly box occasionally as well, talking about, funny enough, Bitcoin. And I describe myself as a hippie Bitcoin miner, particularly at the moment, because I'm starting to look a bit like a hippie with haircut restrictions. But that is really because I've always found Bitcoin mining pretty sexy. I don't know why, I just have. But I'm also quite an environmentalist. So these two things sort of appear to be, you know, quite in contrast to each other, but it's not quite as clear as a picture as you might think. We're just going to have a look at that today, really. But to give you some idea of the mining background here, I've got to click on the thing. This here is a picture of, before I joined crypto sort of full time, I owned a chain of internet cafes and game zones in the UK, actually the longest running chain in the UK, before I sold them all off. And this is how I started mining, really. So all the computers, on the downtime, we'd switch them to mining. And of course, when someone sat down, the mining program would go off and they just use the computers they normally would. And then it kind of expanded into what we called Big Blue, which is a homemade rig of lots of graphics cards. And now, of course, all my mining is in Siberia on ASICs, which is application-specific integrated circuits. And these are the boxes you need now to run the mining operation. So we're going to cover this, as I say, I'm going to break this down a little bit. We're going to do 30 seconds on how mining works, because I'm hoping that Everyone knows roughly how it works, and we're just going to cover enough, if you don't, just to get us through the presentation. We don't need to do all the technical stuff, the real technical breakdown of this. We just need the basics. And then we're going to look at Bitcoin and the environment. There's lots of aspects to this, but actually we're just going to stick with power, which is in the news constantly at the moment, as you may have noticed. And then we're going to have just a quick chat about the coming hash wars and sovereign state mining. Is it actually happening, or is it a myth? And then we're going to have a bit of a chat about these things at the end of it. Right, so let's just do a quick sort of summary on how mining works. So really quick, let's say I'm going to send some Bitcoin over to Caitlin over there. She's top of my screen, so I'm going to send her half a Bitcoin just to say hello, which I'm sure she'd like. That transaction will be put together a whole bunch of other transactions, and we put them all together in what we call a block. So it's not just ours, it's lots of other people's around the world, and they're all put in with a fee to pay the miners. And those transactions all go to this block, and they are then sent out over the network to be solved. I've put that word in inverted commas just to really say it's not really how this works, but it's, you know, I am simplifying. So if there's any miners out there, by the way, don't shout to me. I am oversimplifying deliberately just to get this across. And remember, anyone can be involved with this. Anyone can get one of these machines you can see in the bottom right hand corner there. Get them, plug them in, contribute to the network, and help solve these puzzles. But basically, we're not really solving them. All we're doing is guessing, right? We're literally saying, is the answer to this puzzle, or is the next step in this chain, is it this? And we just send this hash of lots of numbers and letters, and the computer says, no, it isn't. So you guess again, and you guess again, you keep guessing, you keep guessing, keep guessing, and eventually someone gets like the key to the lock and verifies that transaction. So there's a lot of clever stuff, but we don't need to go into that. We're really guessing, and we're guessing very quickly on a lot of machines. Whoever wins it, whoever guesses the answer, gets 6.25 Bitcoin, which is the current reward at the moment. But in reality, there's no single miners who get it. It's all shared amongst mining pools, so we all share in that reward. And everyone else that then goes around and says, yep, that's definitely the right answer, confirms the block, and then we start on the whole thing again. And that's what happens every 10 minutes in the background when you send your transactions. So that's all we need to know, really. It's enough to know the answer today. We're really just guessing the answers with these machines to these blocks to allow these transactions to happen. So, all sounds very lovely, but there are some problems with this. And the first one, and the one, you know, what everyone really sort of picks up on, is there's three aspects to these machines. So that little picture I showed you just now of that mining rig looks an innocuous little thing, but you plug it in, you're going to notice a couple of things straight away. Number one, it's very, very hot. It is very, very noisy. That's the second thing. And the third thing is it uses a hell of a lot of power. So think of one of these. So think of your hairdryer at home. Think of the most powerful hairdryer you've got at home. Let's say it's a kilowatt. That's a really big one. But now times that by 3. That mining rig uses about that much power. It produces about the same amount of heat, and it makes about the same amount of noise. So these things are majorly noisy, hot pieces of kit. And that's what's led to this whole narrative of Bitcoin is bad. Because you can imagine, you've basically got hundreds of thousands of
Thinking
these.
of you, my darling heart.
So you've got thousands of these, hundreds of thousands of these switched on all around the world, running constantly. So there's this idea of it uses too much power and creates all these other problems. So it's easy to see how you get to these conclusions, but you've got to remember Bitcoin mining is difficult to work out because it is quite secretive. Remember, there's no central body, there's no central organization everyone's got to register with. We can see the hash rate, we can see the top line, but that's about it. There's a lot we don't know about what's going on the Bitcoin network. So right now, your neighbors could be mining and you probably wouldn't know. So it's hard to get data on what exactly is going on. That's your problem. I had a lot of white in the last slide, so I thought I'd put a bit of color in this one. On retrospect, probably not a good idea, but anyway, we'll go with it. There's a couple of reports here that are of interest to us, and some of you may have seen these because these reports have led to all of the narrative you hear about now about this huge power consumption. And it really started with a chap called Alex de Vries, hopefully I said his name right, who is or was a analyst at PricewaterhouseCoopers, PwC, and he produced a report in 2018 and said basically we're using huge amounts of power and it's a problem. And everyone came back and said, oh, no, actually we're using quite a lot of green power, so it's all right. And then he came back in 2019 and said, well, I've had a look at the green power problem and actually it's not as rosy as you think it is. And then we have something else called the Bitcoin Energy Consumption Index, which you can look up. If you Google that, you can find it. There's this page and it's quite pretty and it looks very official. But again, it's all done on estimates. So we're trying to work out roughly by making lots of assumptions on how and where this power is coming from. Now, 74 terawatt hours, by the way, just to give you some context of this, is basically more than Denmark, Hungary, Hong Kong, Portugal, Singapore, Bangladesh, Israel, Greece, Kuwait, Switzerland, Chile, and Austria. Now, not all put together, I should be clear. That's those countries individually. And there's actually a whole bunch of other countries as well, but they're kind of the top line. So you can see this is big. This is a lot of power that we're claiming that we're using. But then in August 2020, so last year, another little report came out, which was to do with the Bitcoin Energy Consumption Index. And it just goes to show just how much of a guesstimate this whole thing is, because they just added a little line to their report. And you can still see it now on the Bitcoin Energy Consumption Index. And it says, we think actually it might be double this. It's a bit vague and it is a very convenient double, but they're basically saying we think it might be double this. So it could actually be 150 terawatt hours of power, which is quite significant because that would be more than every country on the planet except the EU combined, USA and China. So it would be the fourth biggest consumer of power on the planet. Now, I'm a little bit skeptical of that claim, to be honest with you, but it does kind of highlight very nicely how difficult it is to get real data. And when I started researching this, I was actually quite astonished to discover it's quite hard to even get electricity production data by each country. So most of them are estimates, most of them are quite old, and it's very hard to find that out. So if we've got countries who, with the infrastructure that they know, can't even provide a specific output, how can you get exact data from this complete decentralized network? And again, you can't really. So next time you hear someone say, oh yes, Bitcoin is very bad, it uses all this power, we agree that it uses a lot of power, but we don't really know how much power it is. But I'm going to concede the point here. What I'm going to say is, for the purposes of today, let's assume it is the worst case scenario. So let's just go with it. Let's just say you can have that point. It is an enormous amount of power consumption. The real question then comes, where does that power come from? Because at the end of the day, if we all had enough power to use whenever we wanted, with no cost to the planet, we wouldn't even be here talking about this now. Power is a limited resource because, you know, it's got to come from somewhere. It just doesn't come magically from the sky, although we will revisit that in due course. But there's a lot about how much of this comes from renewable energy. So we've got lots of estimates out there. You've probably seen again in the papers just today. There was more in there today. There are estimates between sort of 35% to 75% of all Bitcoin mining is done by renewable energy. Maybe. It's probably somewhere between the two. We don't really know, but there are certain things we can look at. Because we don't have the data, we can look at trends, we can look at repeating examples, we can use common sense, and we can understand what miners themselves are looking to do. And there's two aspects to this. So the first one is mining in the long term. Now, weirdly, I'm going to look at long term before I look at short term, and the reasons for that will become clear in a moment. But I'm going to give you this little quote. I've got a little post-it note just to remind me to say it right. So this came from the US Department of Energy. This was a couple of years ago. Each hour, 430 quintillion joules of energy from the sun hits the earth. But the total amount of energy we use, the human race, in a year is currently only 410 quintillion joules. Now, it's a lot, basically. And even saying this was about 4 or 5 years ago, let's just say it now is using all of the power in 1 hour of the sun hitting the earth. What it basically means is we can increase our global consumption by 8,760 times before we run out of energy from the sun. Yes, yeah, I'm simplifying. Obviously, I'm not taking into account distribution, how you produce power at night, where you store it, all kinds of stuff. There's all sorts of problems that we have to solve to really make that happen. But we are now on that journey, and we're big time on that journey, because solar is now the cheapest form of energy production on the planet. And you can see how that's unfolding here. So it's a lovely big chart. This comes from Our World in Data up to 2019, showing us the growth really here in solar power generation. But it's not just solar as well. Obviously, we've got hydro. A lot of mining is based in near hydro stations. And we know that for a fact. So there's lots of data we don't have, but we do know anecdotally a lot of miners are based near hydroelectric. And there is a reason for that. Because with things like hydro and things like solar, you have a little bit less control about how much power is produced. So with hydro, for example, you've got like an economic sort of amount to produce to make that facility work, which means quite often there's an excess of power. And it's very useful for those hydro stations to sell that power locally, because you can't transport electricity that far. So what happens is Bitcoin miners come along and say, right, we'll have that power, thank you very much. We'll give you peanuts for it. And they'll say, yeah, that's fine by us because it's kind of just sitting there. We can't use it anyway. So there is an element of that as well. So there is this kind of whole leaning towards using redundant power in places as well. Now, we are talking long term, obviously. There's a long way to go yet, and we'll see just how far there is to go in just a minute. But the really cool thing is, one thing you can rely on with miners is that they will put profits before anything else, right? That's the reality. And the great thing is that the profit-making situation aligns with what's good for the planet, because we want the lowest cost power, and it just so happens that the new generation of low-cost power is going to come from renewables. So we know, because of human nature, that we're going to end up in the right place. For all the wrong reasons, of course. It's not because miners are thinking, oh, we've got to save the planet. Probably there are a few. But most of them are thinking we've got to keep the costs down because that equals profit. It just so happens that works out very nicely for long-term mining capability. So that's long-term. However, while you're all now feeling happy and fluffy about that, let's have a look at the short-term. Because this doesn't look so good when you look at it from this perspective. This is the production from fossil fuels for power. And you've got the same style graph, this rocketing up with coal, oil and gas. So while it all seems that we'd solved it all, we're a long way behind at this point. And where is this coming from? Well, it's everything you'd expect it to be. It's increased transportation, it's industry, agriculture, power grids in the third world, moving towards first world. Mining is in there, but it's not a primary driver of this, actually, as far as we know. Yes, we know there's some anecdotal examples, but we don't think it's a primary driver for all of this. So we have a problem because this is happening, and we do know that some miners use dirty power as well. However, there's also good news in the short term as well, because there's something else pretty cool going on at the moment. And it started off as a kind of experimental, sort of anecdotal idea, and it actually solves a major environmental problem, which is not something you hear very often with Bitcoin mining. And let me explain what that is. And that is this. This is gas flaring. So the thing is, when you're producing oil, we have your oil fields, you will almost always get natural gas with that oil. And it's a problem because there is a huge oversupply in the natural gas market, and you've got to be hooked up to the network. So you've got to have pipes to the network, and you've got to send your natural gas, and there's no guarantee you're going to sell it because it doesn't have much value in real terms. So what most companies do, or many companies do, is they just burn it. Literally build a huge funnel and they just burn it. And to give you some idea, in 2018, which is the last year that we had the full data, 145 billion cubic meters of gas was burnt off, about 5% of total production. And the reason it's important is because this is extraordinarily bad for the environment. It's about 25 times more harmful than the carbon dioxide, because we produce methane when we do it, which is what you get. You get carbon dioxide when you use it for energy production, methane if you just burn it off. And it's really not a good thing. So what happened is someone came up with an idea, said, well, look, why don't we go to these mining, these oil fields, and what we do is we take that gas, we convert it into energy there and then on the site with these kind of, semi-permanent mobile setups, and we turn it into Bitcoin mining operations. So we're taking trapped power, which would otherwise do tremendous damage to the environment, and we're using it and do something far less damaging with it and contributing to the network. And this really did start off as a few guys sort of playing with this, and now there's lots of different companies, particularly in the US and Canada, it has to be said, seem to be leading the way here. And I've just grabbed one off the internet there, Easy Smart Grid. So they call it now a flaring mitigation system. So literally just turn up with a bit of kit, stops the gas flare, turns it into power, and then turns it into Bitcoin mining. So again, we have a situation where it's in someone's best interest to do this, because a mining company, for example, oil extraction company, for example, has no flaring costs now. They've got a constant stream of income where they couldn't sell the gas before, and flaring is heavily regulated and is expensive to do. So everyone is a winner. Again, the planet's a winner, but for the wrong reasons. But again, Mother Nature says that we will take that. How am I doing for time? I'm about a minute behind, so I've got to keep an eye on my time here. So the key conclusions that on this section really are, first of all, just remember that all data is from assumptions. And I don't like to diss people like Alex de Vries' work, because actually I think his calculations were excellent, and his conclusions, his process was very good. But you can't draw a lot of these conclusions because we just don't have the data. Even as an analyst myself, I can tell you we don't have the data. We only have top line. And mining is not always bad for the environment. It's not always good either, but the trends are good, and we know that we have a quantifiable but unknown short-term benefit that is being expanded on now. And we know that the long-term trend is positive, but the big thing is that we know that miners' self-interest aligns with what's good for the planet. And they're the key points, I think, because over time, we know that these things should marry up quite nicely. So, as I say, there's lots of other factors involved here. We've got heat production, we've got machine recycling, and a few other bits and pieces that, I've written articles on. I can point you to have a look at those as well. But power right now is the big news. Now, the second part of this is very much looking at what's going to happen next with mining, because there are rumors that there are countries now mining at a sovereign level. We need to look at whether that's true and what's likely to happen, and what are these hash wars. I mean, I talk about them occasionally. I know other people do as well occasionally. So let's have a look at what some of that stuff means. Have a look at this chart here. So this is, again, very hard to get this data, a chart of hash rate by country. All right, so this is percentage of total hash rate. You can see China's way at the top there with 65%. And this data comes from the University of Cambridge, by the way. You can actually see this. If you go to cbeci.org, you can find this data and you can have a look at how it's changed over the year. This is data up until April 2020. So we know it's out of date because we've had a halving since then, and we've had a huge bull run. So we know the data is wrong, but it is enough to give us an indication of trend going forward. The key point is, up until the last quarter of 2020, it's a pretty safe bet to say that overall, pretty much all mining was commercial. All right, I'm not sure that picture is as clear now. This actually is the second chart that you get from that website. And there are three countries on that I want to mention on here in particular. Now, the first one is Venezuela, because Venezuela had 0 the year before and suddenly at 0.42%. And remember, hash rate's growing, so you have to grow faster than the overall hash rate to get on this chart. The next one is Iran, because Iran's pretty much come out of nowhere and suddenly got more than 4% now, we think, of total hash rates. But also one that's not on here, which is North Korea. And I put it on there because someone always asks me about North Korea. So I'm kind of preempting that a little bit so that we've we can cover that off to start with. So to have a quick look at those, these guys are our main suspects, if you like, for actual sovereign mining. And the first one, as I say, is Venezuela. Now, we know this country has a lot of problems. We know this country has sanctions, and there's all kinds of issues involved here. But we do know they are making a concerted effort to grow their overall Bitcoin hash rate. And in fact, on 21st September last year, one of the senior ministers there, I can never say his name, it's something like Joslit Ramirez. I've probably got that wrong, but someone might correct me one day and I'll remember it. Announced that they were going to be doing this new program where miners must apply for a license. They must be on a government register. They must keep records for 10 years. They must have approval of equipment imported. But most importantly of all, they must go through a government-controlled mining pool known as the National Digital Mining Pool. You can't use any other mining pool. You have to use theirs. Now, what that says to me is, okay, you know, if you're not doing it now, if you're not mining on the sovereign level, you're certainly setting yourself up to mine on the sovereign level, because those pool fees will, where are they going to? Some kind of government agency somewhere. So we are pretty convinced, generally speaking, that Venezuela is doing some direct sovereign Bitcoin mining to get round some of the sanctions that's on it. Incidentally, that just as a funny little extra thing, the chap I mentioned, Jose Ramirez, is actually wanted by the USA on charges of corruption and narcotics. So it gives you some idea of the sort of the state of the country we're dealing with at that time. Now, the next one is Iran. Iran, again, they announced, this was only September last year, the Tehran Times reported that 3 power plants were being redirected to provide power for Bitcoin mining. Now, sadly, these are dirty plants, that's coal, but they have been directing power to do this. They are doing a similar thing with licenses, and we had a great quote from the Minister of Industry, Mine and Trade, and his name I've written it down as well, I'll never remember this one, Amir Hussein Saeed Nahini, and he said that our studies show that crypto mining has potential to add $8.5 billion to their economy, bypassing sanctions, really, is what he's saying. Now, interestingly, at that time, they were looking at chasing the dollar. But you've probably seen in the news recently that they have also been going around seizing miners on quite a large scale. And there have been rumors and reports of government officials coming and taking that mining equipment and redirecting it towards a government pool. And in January 21, which was only last month, Iran have pretty much all but said directly that they are mining Bitcoin. They're going to use it to bypass sanctions and buy oil and other things into the country. So pretty much that's where we are there. I'm about a minute behind, but I'm nearly finished. And finally, of course, North Korea, those guys over there, we don't really know much about what's going on in North Korea. We never do. We know that there's probably very little commercial mining because equipment, it's very hard to get anything in that country without government approval. But there was one thing I thought was really quite interesting. Last year, a company called Record of Future, a US company, produced a report which showed Monero mining was quite prevalent in North Korea. And they managed to track this by looking at IP addresses based in North Korea. And they came to the conclusion over the previous year, Monero mining had increased by 10x in that time. Now, remember, this is important because for Monero mining, you can't use ASICs, the specialist equipment. You can use GPUs, which are obviously a little bit easier to get. And actually, you can use quite old GPUs to mine for Monero. So we do suspect that North Korea is probably doing some mining, certainly Monero, possibly Bitcoin through government sanctioned equipment, but we can't confirm that either. Anyway, they're my top suspects. So the very last slide that I've got for you today, because I have given you a lot of information, hopefully not too much in that period of time, is what's going to happen next? Well, clearly, one country will gain supremacy at some point, right? Some country's going to come out and say, right, we've got as much hash as we can possibly get. We're kind of leading the way. And as soon as that happens, other countries are going to follow it. Governments will then start producing incentive programs to allow miners to come to their country to produce their hash rate. They will almost certainly create hash rate as a kind of case of national pride, because more hash rate you have, the more assets you have, a bit like having a gold reserve that you can draw on. And I think the most likely model is what I call the NASA model. So when the Americans sent people to space in the past, it was a government agency, but they used commercial companies to bid and provide that objective. And I think that's probably what would happen. So there will be a government agency of some sort ultimately, and then using commercial partners to deliver it. So Caitlin, I'm sorry, I did go 2.5 minutes over in the end, according to my stopwatch here, and I have talked quite quickly as well and thrown quite a lot at you. But you can see this, we just literally touched on this, and there's still a lot of information there. So hopefully I haven't done it too quickly for you, but I'm just going to sort of leave this open now for questions, comments, and discussions, and I'm happy to sort of answer whatever you like or manage it however you want to do it. But I'll hand back to you for a minute just to so you can take control a little bit better, probably.
Thank you, Jason.
Oh, thank you so much, Jason. This was really, really interesting. I loved specifically the kind of political angle as well, and how much of an international relations strategic topic mining is already starting to become today, and will probably become even more so in the future. We haven't had yet any questions. I think everyone was just too busy listening. Anyone in the audience who wants to take the word already? Otherwise, I can start.
Sorry, Oleg, can I just put my 2 cents in very quickly?
Yes, of course.
And this is a bit of an off the wall, and I missed the beginning, Jason, of your presentation, which I did find fascinating. And it's more sort of a speculative scenario of the future. Do you think we're likely to see in the next 2, 5, 10 years that we're going to discover that Venezuela, Iran, and some of these other countries, I'm loath to call them rogue countries because they're not really, it's just they have sometimes rather unpleasant regimes, becoming actually incredibly wealthy, because what they've done over the previous period is to build up a stock of Bitcoin and perhaps other cryptos through their mining activities. And that and assuming that cryptos gain more international recognition and are more readily tradable, and that governments are using it as perhaps a reserve currency, some people speculate, that suddenly those countries will go from being rather impoverished to rather wealthy and powerful. And I'm just wondering what your thoughts are on that.
Yeah, it's a very interesting angle, Larry, and you're absolutely right, because we do sometimes talk about the whole kind of wealth transfer idea of people owning Bitcoin, because it's quite a level playing field, really. In poorer countries, you could easily hold it. You can hold it as easy as you could in richer countries most of the time, but it does apply to mining as well. And I mean, I agree with you when we say rogue states. I think we also say pariah states, don't we, for these guys? But it didn't come to any surprise at all to me that the first countries to do this would be these states, because they are under pressure and they need to find a solution. And they'll try anything. They're probably more open-minded in that respect, and they're probably more likely to get in first. And I think they're doing it now, and there will be others who will follow. And it is a real possibility that we will see some of that wealth transfer on a kind of global scale go to these other countries. So yes, I absolutely agree that it is possible, and it may even happen.
Great, thank you. I have a couple other questions, but I'll wait. Just Oleg, see who else is out there.
Yeah, I think we are getting now a few questions coming in. There's one question from David Moore. He would be interested to hear more about the machines in your internet cafe switching to Bitcoin mining, and who suggested that to you in the first place.
It's a great question. Do you know, I've never been asked that question, actually, ever. So it's a nice one to have. Yeah, it was, we were looking for things to do in the downtime, really. I mean, back in the day, you might have remembered, do you remember the SETI screensaver? That you could download data and process it for them. And if you get, if you found extraterrestrial life, you get partial credit for it. So we're always looking for something to do with the computer downtime. And we discovered Bitcoin, years previously. We didn't do it properly, to be honest with you. And it was only later on we kind of realized we'd missed the boat with the Bitcoin mining. We actually moved most of it to Monero mining and a little bit with nice hash as well. But we got really good at it actually, because we had a program that when the computers rebooted in the morning, because they rebooted once a day, they had some locking software so that people couldn't fiddle with it. It would run the program and it would constantly mine, but the computer would look like it's on standby. So as soon as a customer came in, they wiggled the mouse. By the time the monitor came up, it looked like the computer had just been sitting there waiting for them. The mining program went off into the background. But after 8 minutes of non-use, it would come back on and then switch off all the peripherals and allow it to mine. So we were really pleased with it, and it was a really cool system. But of course, long gone now. I sold the last one, good 3 or 4 years ago now.
Thank you, Jason. There's one question from Luis Van Zeel. Luis, I'm responding to your first question in the chat, but the second question, will quantum computing level the playing fields? That's an interesting question.
It is a great question. And this does come up from time to time. Actually, I'm going to defer to Andreas, I can never say his last name, Antonopoulos' answer on this one, because he really covers this beautifully. You know, his answers, they're all about 8 minutes long, but so I'm going to try and paraphrase it quickly. But he's saying, look, you know, in theory, it might be possible in the next decade to break the SHA-256 algorithm. It might be using quantum computing. But his point is we will know well in advance that that's going to happen. And if necessary, we could increase the encryption of the Bitcoin algorithm by consensus. So it could be changed that way, and we would know well in advance that that's going to happen. But even at the fastest development rate right now, we are probably at least a decade away before we have to worry about that. Mm-hmm. I'm going to turn screen sharing off, actually, so we can see each other better. Probably would be better, wouldn't it, I think?
Mm-hmm. Thank you. Then there's a question from James Houston Bond that, well, in a gold rush, it's always best to be the one selling shovels. So large number of crypto mining companies are floated on the NASDAQ, and a lot have seen 50 to 100% increases. What would be your criteria for assessing them as companies for investment, given normal metrics doesn't quite apply?
Oh, that's a really good one. Also haven't had that one before. Yes, you're right. There's a whole bunch of going on. And your analogy, by the way, with the gold rush and the shovels, you're absolutely right, because that's where we are now. And I do talk about this quite a lot, being in this kind of gold rush stage of Bitcoin mining, where we're all, you know, if a machine comes out with a slight improvement in power, we'll take it. You know, this will all settle down in due course, but we are in that phase right now. So we've got enormous growth, I think, in the next few years. So it's all going to come down to who can really position themselves to get that position, that kind of lead in the market. So your fundamentals are going to have to base on probably more on the future than current fundamentals. So who's in that team, where are they going, what contracts have they got, what agreements they've got, what power partnerships have they got. That's the sort of thing you've been looking at. You're absolutely right. It sounds like you really know what you're doing with this anyway, because looking at current fundamentals is going to be difficult. This is going to be a bit of guesswork and a bit of kind of, we think these are the ones that are going to be the Amazons and not the MySpaces.
Mm-hmm. Thank you. And then one more question from David Moore. Should we expect Saudi Arabia to become filled up with miners on top of oil wells?
Yeah, that's a good one, actually, because it's not something really that's been going. There's a little bit of mining going on over there, but it's not significant. I would think that given the changes that are going on in the world, we've all seen what's happened with oil production in the last year in particular. It could well be that someone's going to twig that this is a way they can go and they can do it. I mean, I don't know much about the market and what's going on over there, so I can't really answer that definitively, but I'd like to think that will happen.
Mm-hmm. Thank you. And then we have a question from, I'm trying to open it here, Dan McGregor. Do you think the attraction to nation states of mining Bitcoin to bypass sanctions will change upon future halving events when the rewards get slashed?
Will change. Oh, hang on a minute. Will change future halving. Okay, so as it gets harder, really. In theory, no. I mean, we do have a supply problem with Bitcoin, of course. Well, it depends. if you define it as a supply problem, it's doing exactly what it's supposed to do. But we have a situation right now where clearly we've got a lot of demand. And the thing that's very unique to Bitcoin is it doesn't matter what that demand is, doesn't matter what the price is, the supply will never be affected. So it doesn't matter if it's $1 million or $1, it's still going to produce the same number of Bitcoin. It's not true for gold or anything else. So as the time goes on and that demand continues, as we think it probably will, we're always going to have this supply shortage. So even as time goes on, you get less and less rewards. The value of those rewards should at least stay the same. So that mining should still be viable at all times. So I don't think that will be a factor into those into that decision making, or not a primary factor anyway. There'll be other ones which are more important in my view.
Thank you. And then actually one question from myself, from a political point of view, like how well connected are the miners to each other? Like, is it by now the case that like all the big miners like know each other and talk to each other every week? Or is it more the case that it's kind of, they really also are competitors, they don't talk, they don't coordinate? Like how much coordination is there among them?
Oh, that's a good one as well. Yeah, probably all of that. I mean, I know quite a few miners. I speak to them on Telegram. I suppose it's a weird thing. It's a bit like, you know, generally, particularly if you're British, you don't go around asking someone how much they earn. We just don't do that in this country. No, it's more, some countries are more open than others. And it's interesting because if you speak to a miner, it's very rare they'll tell you what amount of mining power they produce, how many terahash they're producing or petahash they're producing. And I've noticed if I ever ask someone, they're a little bit reticent, and actually I am as well if people ask me, and I'm not really sure why that is. So there is some kind of psychological competitive angle, I think, involved with that. So there is communication for sure, because there are Telegram groups where we do talk to each other, but certain bits of information directly and very specifically are not passed over. So kind of a bit of both, I would say, is the answer to that question.
Thank you. Larry, you wanted to ask another question as well? Larry?
Sorry, I was muted. This is again another off the wall question, but Jason, you seem to know quite a lot about all this stuff, so I'm going to pick your brains anyhow. Is right now the international remittances business is worth about $1 billion a year, and it's, you know, it's always basically from north to south, the vast majority of it, what I would call from north to south. And I've been speaking to a few people who believe that Bitcoin, crypto more broadly, are going to begin to replace the transfer of fiat currencies to these countries where people, you know, I mean, if you look at, I was talking to somebody the other day about the huge Mexican community in Illinois, in the United States, and there's a vast amount of money just moving from Illinois, from Chicago in particular, into Mexico as dollars, obviously. But there is also seems to be a drive and a tendency to where people can to use crypto as a method for doing this. And I'm just wondering if this is, if you ever hear anything about this, or this is something that is likely to increase in the future as crypto becomes more accessible and also more anonymous in terms of the ability to move currency.
Yeah. Yeah, I mean, also, this is kind of broader than just mining, and I think there's probably a lot of other people. Sure, there's a lot of other people who could probably comment on this just as well as me. My perspective is the short answer is yes, and we do see that already. So for you, you're talking about Illinois and Mexico. For over here in the UK, we would probably say there's a lot of people who send money back to certainly Africa. I know there's a lot of people who do that on a regular basis. And actually, when I had the internet cafes, we had a MoneyGram service. So people used to come in and send it all the time. But I do know for a fact, because I do have colleagues over in Africa, that people are using crypto to send value over to that country. And I know this purely on an anecdotal basis. I don't know the scale of it, but I do know that there's more and more people doing it. So again, I don't know the data, but I do know the trend, and the trend is definitely going that way. Now, of course,
sorry, I was going to say, then the flip side of that, of course, is that you're then hearing that central banks like the Nigerian and the Indian central bank are saying, we're going to regulate this completely out of any viable world where people can actually make use of it.
Yeah.
You know, for various reasons. I think in India, it's nationalism. In Nigeria, it's crime and money laundering. I mean, they all have their own reasons, but you know, if that trend increases, at least for the foreseeable future, rather than move the other way, that's going to really slow things down in a lot of these countries.
And I think actually you're right. And that was the point I was going to make next, particularly about Nigeria, of course, because that's very fresh in the news. And actually, I do have a couple of colleagues who are based over there. And of course, the first thing I did was ask the question, how the hell is this going to affect you?
Yeah.
And actually, weirdly, the answers I've got are they're not massively worried about it because there's so many other routes that they can take through neighboring countries and so on and so forth. So at the moment, it's all a bit of a workaround. And Nigeria and India, they're going to struggle ultimately to try and ban it completely. They can pretty much only close on and off ramps. That's it, really.
Right.
There's not much else you can do. So we're going to go through this whole transitional period where countries try and ban it, don't succeed. Someone else will try and ban it. It will create new opportunities. Things will move, but you can't stop the trend, and you won't be able to stop people doing it. That's just my view.
Okay. Thank you.
Mm-hmm. Thanks, Jason. One more question for me. I used to know a couple of Chinese miners in 2017, and it was quite a wild west still. I'm curious how I haven't really been following the scene much, so I'm quite curious how much more professional it has become. Like I remember they were doing a lot of their work, basically like selling OTC through like random Telegram groups. You know, it was really nuts. And I imagine that today with like Coinbase custody and like OTC desks, everything has become much more like almost like corporate probably. What would you say about that? Like how much more like professional or shady is it these days?
Well, it couldn't be any less professional, I think, because you described that beautifully, actually. I have to say it was some of the stories I heard were amazing. How people were stealing power, they were sneaking machines in. I mean, it was a crazy time. Now, I am sure that some of this still goes on. Don't get me wrong. And you remember, China have been really quite funny about cryptocurrency and mining because, you know, 1 minute it's all right, then this aspect isn't all right, then it is all right, and then we're going to change this. So it has been a little bit difficult for miners really to assess where they are. So there have been and still are quite a lot of underground operators who are kind of staying under the radar because they think don't really want to get on the books at the moment until I know exactly where I stand. So the short answer is it is better than it was, but there still isn't as much clarity as they would like. So, you know, human nature tells us straight away there's going to be some underground mining activity going on.
Mm-hmm. Cool. Yeah, makes sense. Do we have any more questions? Any more questions from anyone on here? I don't think so. All right. Anything else, Jason, that you would like to add?
No, I mean, I've really enjoyed being here today, guys. So I really appreciate you inviting me. And I know I did, you know, speak a lot very quickly within those 25 minutes to try and get that information across. But I left my contact details on the screen. Actually, I've just taken them off, haven't I? I'll put them back on a second, just so you can see which was that one there. And it's a genuine offer whenever I do an event like this. So I say to people, look, there's my contact details on the right-hand side. Twitter's the one I use the most. Please don't hesitate to get in touch. You know what it's like. You think of a question 20 minutes after the event's finished and think, I wish I'd asked that. Please don't be shy. My DMs are always open. Just drop me a line. I will answer directly, usually within a day. You can also follow me, obviously, on Twitter or contact me on LinkedIn as well. If you're on voice.com, then you can find me there. And if you use Medium, that's probably the one I'm known mostly on. Medium.com profile is over there. And there are quite a few articles over there on Bitcoin mining. and much more detail about some of the other issues, and lots of other bits and pieces as well, all to do with Bitcoin and pricing and market analytical stuff. But I just want to say I really enjoyed it. Really fabulous questions as well, fantastic ones. And I hope to see you again at next month, where I can grill someone else who's sitting where I am.
Thank you so much, Jason. Jason, actually, we had one more last final question that came in just as you were speaking from Nazareth. He's asking about the effect of halvings, and what do you think of the upcoming one in 2024?
Okay, well, we're still a way off that yet. So 3 and a bit years roughly until we're expecting to hit that. The mining equipment we have now, which is current generation, is things like the M30, M31S, that kind of stuff. They are pretty powerful. I suspect they will be still in use by that end of that 4 years, and they will still be profitable. Now, in terms of pricing, it depends really what you believe where we're going to go from here. You think about Plan B's stock to flow model, for example. If you're following something like that, the halvings make a big impact on this because of the drop in demand. I forget his numbers by the next halving, but they're pretty significant. But again, the whole point of that is it reduces the amount of Bitcoin you acquire, because there's less available to mine anyway, but the value of that Bitcoin will be considerably higher. In theory, this is how all the numbers work in theory. So you would still carry on mining, but there's always a transitional period. And after a halving, there is always a drop in hash rate for a month or two while miners reassess and adjust.
Thank you. Thanks very much, Jason. And just before we close, I think, Larry, you wanted to say a few words as well on the opinion of 3 years.
Yes. First of all, Jason, thank you very much. That really was enjoyable. And I learned quite a lot. And it's always great, when we can learn some new things. And I think, as Caitlin might have said at the beginning while I was struggling to get on earlier, this is, we're celebrating 3 years tonight of Crypto Mondays in London. Excuse me. Caitlin and I met 3 years ago when we were asked by Lou Kerner from Crypto Oracle if we would put our heads together and try and organize Crypto Monday in London. And it's gone from strength to strength, we feel, and we were joined some time ago by Oleg and Devin. It's been a great team. And I think we've managed the virtual end of it extremely well, very much appreciative to Devin, who's helped us with some of the virtual Zoom aspects, which we really appreciate. But it has carried on, and it's been very good. I think we're all desperately looking forward to getting back into a big room with some wine and beer and some good snacks and chat, and seeing people face to face. And when that's going to be, nobody knows. But we really do appreciate those of you who come back again and again, and those of you who are here for the first time. And we hope you'll come back again. Are we teed up for March, or we're still working on it?
Yeah.
Okay. It always comes together. We always end up with a good speaker, good subject. So keep your eyes open. Everybody, if you're here tonight, you're on the mailing list, and we'll be certain to get in touch with you and let you know what's coming up at that, whatever the Monday is in mid-March. So on that word, thanks again to everybody. Thanks to Jason, and thanks to the whole team. And we'll see you again. Thank you.
Thank you, everyone. Good to see you. Thank you very much, Jason.
Cheers, guys. See you next time.
Thank you
so much.
Bye-bye.
See you soon.
Thank you. Bye.